Despite the rout in tech stocks on Wall Street, companies globally are in the midst of a digital transformation. There's an insatiable demand for reliable cybersecurity and privacy protection. SGTech, the leading trade association for Singapore's tech industry, expects the digital trust market to double to roughly $500 billion in 5 years. SGTech is holding the world's first global forum on digital trust, and joining us live from the event for a CNA exclusive interview is DBS CEO Piyush Gupta. Piyush, great to have you with us on the program this morning. Thank you so much for taking the time. Let's start first with this immense demand for cybersecurity, privacy protection as companies go digital. Where is DBS standing in this digital push?
Actually, Avril, I'm going to broaden that debate because in my mind, this whole idea about digital trust is important and it's got more than just security and privacy behind it. To me, if you really want to get the same kind of trust in a digital domain that you often have in the physical world, you need to be thinking about, first of all, reliability. The systems have got to be available and work when you need them, and the experience has got to be easy and seamless. It's quite clear. We had this experience ourselves some months ago. Last week, a very well-known application in Korea went down for 4 days. And immediately you see people jumping up and saying, can't trust it. We need to find an alternative. It happened with WhatsApp as well 2 days ago. So reliability in its broader sense, you have to ensure. You also have to focus very hard on authenticity. The biggest challenge right now is this problem of deep fakes and misinformation. And if you don't know what you can trust, if you can trust what you read, if you can't trust what you see, that creates an environment in which this idea of trust becomes very challenging. Then you move on to the things you talked about. I mean, security is paramount. Today, there are not only state actors, but large criminal syndicates who are always trying to get into all kinds of not only end-user devices, what you carry in your pocket, but the intermediate devices, the switching equipment on the telecoms, and also back-end devices, for example, in the banking space. Now, obviously, as a bank, we spend a lot of our time and energy trying to do peripheral defense. We call it an onion layer strategy. We have 7 or 8 layers of the onion. But, I go with the premise that this is not a matter of, if but when. Sometime or the other, somebody can get in. So the other thing we do around security is use a lot of techniques which assume that somebody is going to get inside. So microsegmentation, pattern recognition, analytics, AI, etc., to guard as much as we can. The fourth you talked about was privacy. Now, privacy is even more difficult because privacy is not an absolute. Privacy, the notion of privacy varies considerably from cultures. How the West, liberal thought thinks about data privacy is oftentimes very different from Asia, where the rights of public and rights of society often trump the right of the individual. It also varies by age. It varies by time. So how do you create an environment, even a consent architecture, which is consistent across multiple countries, geographies, global, is not easy either. It's actually quite challenging. And then I want to move on to, appropriateness. Today, we are all using data and artificial intelligence in multiple ways. We have millions of models running. Continue to be focused on, is this appropriate? Is this sensible? Is it in the protection of the customer? That's hugely important. At DBS, we have a paradigm we call pure. It must be purposeful, unsurprising, respectful, and explainable. But again, it doesn't work that well all the time. And finally, I call this thing about accountability. So if something goes wrong, do we know who's accountable? How do you establish accountability? And then all of this needs to rest on a bedrock of rule of law. A civil society which focuses on white crime, white-collar crime, a society where if some things go wrong, you have an element of recourse, you can go for a legal construct. So a lot of things have to come together to establish a regime of digital trust.
Certainly, multiple ways required to kind of secure this whole ecosystem, many layers. But just peeling things back and picking up on one of your points about the biggest challenges, one of them being deep fakes. Clearly, scammers or hackers are becoming more sophisticated, and banks such as DBS can try to do all they can, but essentially, how do you stay one step ahead all the time?
It's very hard. So one of the things we do, for example, is we contract with agencies which are constantly operating on the dark web, on the deep web, who continue to score the web to see is there any reference to DBS, to our banking brands, to our arrangements, or is Piyush Gupta's picture floating around anywhere, spouting things which I've never said. Unfortunately, this whole thing is quite cumbersome. So we use multiple agencies. We also use web scoring and web listing tools, AI tools, to try and pick it up. But then the focus is how do you bring this down as quickly as possible? Every day we identify over 100 phishing sites which purport to be DBS, and we're constantly bringing them down. Now, this links back to the rule of law. In the old days, to actually bring down one of these fake sites used to take hours, even days, because you had to go to the police, you had to go to the telcos, you had to go to the web hosting services. Today, that infrastructure and arrangement has speeded up a lot. So as soon as you identify there is a fake somewhere, within an hour or two, you can bring it down. But when you think of the enormity of this problem on a global scale, if somebody is doing a deep fake, out of some other part of the world, different geography, do I have the access and reach to bring it down? Not that straightforward. So eventually, I think you're going to need a global infrastructure, an Interpol of the internet, if you will, to try and really think about how do you make these things happen. Because the truth is you can't get ahead of the curve. I have no idea who might do a deep fake when. You only have to be responsive, reactive, and be able to do that in as close to real time as you can.
Right. Piyush, I'd just like your thoughts, because something that's obviously of a lot of interest is trading in digital assets. And with all this interest comes heightened scrutiny. How do you establish trust for the digital assets trading platform at DBS?
Well, one of the good things about the new technology, blockchain or generally distributed ledger technology, is that the underlying protocols are architected on being able to establish authenticity and trust much better than the old paradigm. In the old paradigm, you relied on an institution. You relied on the bank to say who has how much money. I relied on the stock exchange to say who owns, what stocks, or a registrar of society to say who owns which house. And even though we believe that that is trustworthy, it's really quite easy to change the records or hack the system. Whereas the digital ledger, a blockchain technology, requires a preponderance of evidence across a multiplicity of players to be able to actually change records, which is why the technology really creates records which are relatively immutable. My own view is over time, blockchain and distributed ledgers can actually be much better forms of authentication and authorization than our traditional measures. The question is, how do you actually get to a place where you have an exponential, large-scale network use of this across multiple use cases and people are willing to accept it? I think that's an evolutionary process. It's not going to be overnight. It takes time. The other problem with this, of course, is that increasingly you also need to have guardrails to make sure people are not misusing the system. Today, you can authenticate and authorize, but you can't keep out bad actors, whether it's anti-money laundering or terrorism financing. So there are agencies today who do purity checks to make sure that tokens are authentic, genuine, they're not being tainted. But again, the soft infrastructure that supports this will also need to improve. But if I had to wager a bet in 5 or 10 years, I think it is these technologies which actually will not be the problem, they will be the solution.
Okay, even looking at these secular trends of digitalization, there are pressing immediate issues in the global economy, such as inflation, and central banks are doing all they can to tighten monetary policy to try to rein in this price pressure. But what is your take on where we stand on inflation 2 years from now? How sticky are the price pressures that Singapore and the global economy are facing?
Well, if you unbundle the inflationary drivers into 2 or 3, the first inflation driver was obviously supply chain shocks. That was the COVID, that was the shipping lanes, the port congestion. That by and large has got unraveled. So I don't see that happening too much. However, I would also hasten to add that geopolitics and a shift in the nature of the supply chains might continue to create some friction for some time, but I don't think there's going to be a key driver over the next couple of years. The second big shock is more uncertain, and that is the energy shock coming out of Russia, Ukraine. It's much harder to call. Do you see complete inflation in oil and gas prices over this winter? It's quite possible. There is, the supply-demand imbalance around energy depends on weather. and how bad does the winter get. And so you could see a challenge coming out of that idiosyncratic shock. On the third side, increasingly now, there is a lot of inflation in the services sector, and much of that is driven by wages. I'm actually even more worried about that. The truth is that wage inflation, once it gets into the system, starts getting a little sticky. It's not easy to dial down. Everyone I speak to expects wages to be much higher in 2023, the wage increases to be higher in 2023 than in 2022. And so it just worries me that this is beginning to get entrenched in the system. So you can see a spate of inflationary forces on the one side. On the other side, there are a couple of things which have some cause for hope. Number one is obviously the Fed and central bankers are intent on trying to destroy demand. And it's not clear what terminal rates you get to, but plus minus 5% seems to be a general expectation. I do believe at 5% Fed policy rates and accompanying set of rate increases around the world, you will see demand destruction. So that should be helpful. Question is how quickly. And that's something that we need to wait and watch. The other positive is that inflation expectations are still quite anchored. So even though inflation is high, if you look at the 5.5 as a measure of forward-looking inflation expectations, they've not got out of whack. And so that gives you some confidence as well that inflation might be tempered. So it's a long answer. I think the jury is out on whether you start seeing a reduction in inflation. My own bias is you will start seeing it. Some of the baseline effects will help. And you'll see the headline rates, the core CPI rates start coming down, frankly, from here on. The question is, do they come down enough? And therefore, at what stage do central banks feel confident that they can dial back on a tight monetary policy? Again, my own bet is you won't see that in 2023.
Okay, we're also in a quarter that's been marked by political transitions, and we're expecting that out of the world superpowers, the US and China. And there are the sense of this, brewing tensions between the two countries. How much of a geopolitical risk is there going to be as we approach the next year?
Well, I think geopolitics is probably the largest concern out there at this point in time. The reality is that the stakes are being ratcheted. I mean, the set of actions from the US in recent weeks and months, including the latest pronouncements on chips and stopping the export of all kinds of chips into China. I think some of the publications are labeled it as almost tantamount to an economic war. But on the other side, if you read the Congress report from President Xi, it has actually also raised the temperatures a little bit. The constitution of the Politburo with more military members, the statements on territorial integrity. So I do think that this is going to be a challenging relationship in the foreseeable future. My one hope is that underlying all the rhetoric, the reality in economic terms is that China and the West are very fused. China is the largest trading partner to almost 70 countries around the world. And no matter what the external rhetoric is, the underlying trade is continuing. China's exports into the US, the trade deficit, even with partners like India, that hasn't stopped. It continues to grow apace. And so my one hope is that eventually economics trumps politics. But I have to admit that that's an area of concern.
Okay, how do you view tech investments in this environment then? We have tech as a battleground between the two sides. And another issue is that in this past week, we've seen a tech rout hitting US stocks. Chinese stocks are also affected to a certain extent because of concerns of a crackdown on the private sector. There's a sense that these tensions are brewing, but there are also secular trends that tech investors can benefit from. Overall, how do you view them?
Well, I think, the answer is in your question, Avril. I do think the technology is a secular trend. If you had to do some crystal ball gazing, 10 years out, the role of artificial intelligence, blockchain, AR, VR, these are here to stay. I think the nature of society and the nature of the world will be profoundly different as a consequence of these technologies. Already, if you look back the last 15 years, the way we live is completely different. It's not just Web 1, but Web 2. We are all using mobile phones. We have such massive power in our hands. This is going to continue to change apace. I'm not even getting to space technology and biotech. And therefore, investments in these areas are going to be crucial. Frankly, which is why everybody, all countries, not just the US and China, are continuing to double down on the nature of these investments. So I think that will continue. Now, as far as the markets are concerned, I think it's quite clear that many of these companies, especially startups, especially non-cash earning companies, especially companies with suspect business models, were overvalued. And so the sell-off was overdue, and in some ways it's welcome. You know, it's a creative destruction process, so it's not a bad thing. I also believe that some of the companies have been oversold. There is a massive degree of pessimism about everything to do with technology. So I do think in some of these companies there is underlying value, and they're likely to bounce back. My net advice would be it's a good sector to be in. In some cases, there are good valuations and entry prices. I think the short term is still likely to be choppy, but there is going to be a lot of idiosyncratic risk. There's going to be risk on the regulatory front. We've seen that in China. There's also going to be risk on the technology front. The technology itself is changing very fast, so do bet on the right technology in the right place. So you need to be a thoughtful investor if you want to be in the sector. But for me, you don't have a choice that in 10 years from now, many of these companies are going to be the companies that are the maximum value-creating organizations.
Piyush, you've given us a lot of food for thought. Thank you so much for sharing your insights with us. That's Piyush Gupta, CEO at DBS.